This is Benzinga Live with Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasik from Trendspider. We have a
breaking news. What is up, everybody? Welcome back to Benzinga Live. Different look today. We're doing it from the Blue Room, little OG feel today. Outside our normal desk is being used right now, so today we'll be hanging out in here. But thanks to everyone joining us. Smash the like. Let me test something real quick. There we go. All right, I'm getting audio now. Let me know in the chat how everyone's weekend was, what stocks you guys are watching. Let me go ahead and get my Benzinga Pro pulled up, and we'll run through some indices real quick because we only have a few minutes, and then Jake Wujasik from Trendspider will be joining us. I'm excited to get Jake on, see what charts he's been watching. Been a couple weeks since we've had Jake on, since we missed last Monday's show, of course. Your S&P 500, the SPY, down a little bit more than 0.25%. You can see here, we're on the daily chart here. Let's go to the 5 minutes. We were moving higher this morning after, futures were lower all morning. Bitcoin, crypto struggled throughout the weekend. We will talk about that. But SPY here, you can see just over the last 30 minutes or so, hit that around 387 level right here, rejected, boom, bounce back. Looks like we're getting some buying down here around the 384 level, but I'm expecting the S&P to just remain choppy, especially until we get this FOMC announcement on Wednesday, I believe. The consensus is right now for a 75 basis point hike. The CME Watch tool, which of course we check in a lot, basically saying, hey, look, 8.5 times out of 10, we're going to get this 75 basis point hike. They're giving it a 14% chance, so a slight chance they go a full percent, 100 basis points. We'll talk about that and kind of the implications of what either of those decisions will mean for the markets heading forward. Some investors, some traders out there actually calling for the full percent hike. I don't know. I mean, I don't know how much the market's going to react to it if they do go full percent. I don't think they will. But I think what matters more is the tone going forward, right? If they say, okay, we're hiking, if the Fed says we're hiking a full percent here, higher than expected, the market may, dip more than what would have after 75. But if they say we're hiking a full percent here, but we're going to abandon our dot plot, our future guidance, and we're going to just kind of remain data dependent here. We're going to see what inflation's doing. We're going to go a full percent now. That might be, the market might rip off that. So I think it's less about the decision to go between 75 and 100 and more about Powell's tone and kind of where it sounds like the Fed is going forward. Because right now, I mean, it's been clear the Fed has said, hey, we're willing to tolerate unemployment rising. We're willing to tolerate pain in the labor markets to bring inflation down. But as a recession looks more and more likely, not just here in the United States, but across the world, that means central banks, again, not just the Fed here, but around the world, are going to be then more likely to say, okay, now we're getting a recession. Now let's put our foot back on the gas a little bit, So as soon, essentially, as the Fed and central banks around the world do their job in trying to bring inflation down, if that's causing recessions around the world, you will see those central banks start to pivot fairly quickly. I believe I saw a stat that I think 16 central banks around the world are set to make a decision this week regarding rates. I mean, pretty sure most eyes will be on the Feds here in the U.S. But all right, heading over from the S&P 500, let's go over to the Qs. Your Qs, the Nasdaq 100, down a little bit more than 0.5% today. So tech showing some weakness. We can go through some specific sectors. Energy, XLE. Let's look at this on the daily chart. XLE has been so interesting because, back here in April, even as the market was turning over, when XLE was ripping, and of course you had the Russia-Ukraine tailwind of saying, okay, now supply is going to be more limited. Gas and oil is going to be more expensive. These companies are going to do really well. You can see that run up here. And it really didn't start with that, right? You can see starting back from December 21, you've had this big run up all year, all 2022. You've had this big run up in oil and gas because demand has just been increasing. What we're seeing now is this isn't from, this sell-off, I guess, kind of starting here, but even here, it's not from, okay, the war is getting better in Russia, Ukraine, supply is going to normalize, all this stuff. It's more, this is people worried that a true recession will drop the demand in oil and gas, not just, for a short period of time, but potentially for a while. And you can go back, right? We're looking at the XLE here, which basically just tracks the energy sector. If we go to a monthly chart and go back to 08, you can see here this thing went from $90 to down to 40. We're at 77 right now. So people out there, you might like see oil and gas companies or different energy companies as a safer play, as safer than a lot of these tech stocks out there. But in a true recession, if that's where we're heading, these oil and gas stocks tend to get hit as well because people are there's less demand. People are traveling less. People are driving to work less. People are getting laid off. So, I think this is interesting here because you can see if you think, right, that we're somehow going to avoid a recession here, then some of these energy names, XLE or Chevron, whatever, it could actually start getting interesting because you're going to have these supply crunches and prices be elevated for a while. So if demand stays steady and price is higher, then these companies should do fairly well. But if that demand drops, that's where they're going to run into trouble. So I've been watching the energy sector, the bank stocks, XLF, had a good day. I believe it was last Friday, maybe last Thursday, showed some relative strength against the market where pretty much everything closed down and then the financials were up. So I don't know if that's just people saying, okay, higher interest rates, good for banks. What's going on there, but we'll continue to watch some of the different bank names, some of the different energy names. Another name I've been watching about, maybe I'll ask Jake about this one too, but Netflix. Again, on the daily chart here on the Netflix has been showing relative strength against the market, right? Let me see if I can overlay the Qs chart here, and we can just see over the last. Yeah, I mean, you can see here. So here, Netflix, the purple line's your Qs. Netflix is trading pretty evenly down here all throughout July. But then starting, late July 20th, Netflix really starts breaking out. And even here, especially in September, right here on September 6th through, I mean, today's not a good example, but through September 6th, Netflix was moving higher, went from here's now it's not showing me the price, but either way, up 18% over this time frame, while the Qs are down about 10%. So Netflix showing relative strength against the market. Not a great day today, but I'm gonna keep watching this one because hey, in this environment, I want to find the names that are showing relative strength. Apple is holding the whole thing up at the moment. Yeah, which is weird because everyone was talking shit last week on the Apple announcement. And I get it, right? Like, I don't think the iPhone 14 is that exciting either, or the new Apple Watch. But people have been saying that about Apple for how long? 10, 12 years old? Like, how much can they really innovate beyond the iPhone and the MacBook? Which there may be truth to it. But the other side is that it doesn't really matter that much. Does it matter if they're not putting out the next revolutionary phone or computer that's going to absolutely change the world? It might not matter if they just keep putting out products that people are willing to buy. And we'll see. I mean, time will tell if sales are way lower this cycle on the iPhone 14. That won't be a good time for Apple. But I've heard that all before, that Apple's done innovating. Apple hasn't put anything new out in the last 10 years, yada, yada, yada. It's been a machine. If that cycles down, if people are buying less iPhone 14s and the stock comes down another 10% or something because of it, I would just see that as a buying opportunity long term for Apple. Maybe that means this year's iPhone isn't going to be great and innovative because they're working so hard on the next one. All right, guys, I do see our first guest hanging out backstage with us, Mr. Jake Wujasik from Trendspider. Like I said, it's been a couple weeks since we've had Jake on. So without further ado, let's go ahead and get Jake our very special intro and bring him on the show. Mr. Wujasik, how you doing today?
Doing well. How are you? Thanks for having me on.
Always, man. Thanks for coming on. So, like I said, it's been a couple weeks since we've had you on. What have you been watching?
Solar names, relatively doing pretty well compared to the rest of the markets. And it seems like that's kind of spilled over to just really any like alternative energy, renewable energy names. So, NEO, BLNK, Tesla. So, actually been kind of watching those a lot. Was watching Apple and then, kind of broke down from the level I was watching. So haven't really looked at it too much since then. But, we're just kind of going into a period of time from now until Wednesday where I just think if you want to trade, you're just going to be kind of, if you're not day trading, you're going to be really just taking a big risk into Wednesday's event, and that's probably why I think the markets are just kind of chopping around right now. So yeah, I'm really just kind of waiting to see what happens on Wednesday to kind of dive deeper into some individual names, but you've got some things kind of hanging on the edge there. Bitcoin, we always talk about Bitcoin. And for me, Bitcoin's definitely the best proxy for kind of risk on or off sentiment in the markets. And, we're at a pretty big spot here on Bitcoin. Almost broke down last night, but kind of together. But you'll see here that, we're just at the kind of almost the apex of this descending triangle. So until we make a move either to the upside or the downside through this area, it's going to be hard for me to gauge, what the market's looking at for just risk on and risk off going into the end of the week. But this will definitely be the main chart that I'm focusing on. And then obviously, SPY and the Qs. But Bitcoin's always up there for me to just, not because I trade it, just because I use it as a risk proxy, similar to like IWM or something like that. So this will likely get, a pretty big move. Descending triangles a lot of the time are bearish when you look at the statistics, but when they do break to the upside, they have really strong moves up. So until we break one way or the other, this thing's just kind of trading and chopping around, just kind of like the rest of the market as well.
Yeah, and I'm curious. So I saw, in the title of today's show is talking about the Nasdaq Bitcoin connection. I was delving into some, I think it was from Bloomberg this morning, some charts and whatnot they were putting out there. It's interesting to me because obviously over the weekends and stuff, when maybe the futures markets are closed, people are watching Bitcoin. But it seems like as soon as the futures open or the markets open, that it's really Bitcoin reacting to how Nasdaq or how the SPY is trading. Is that how you see it?
No, not always. Sometimes Bitcoin, will top before the markets a lot of the time. So for example, back in mid-August, Bitcoin actually topped out before the broad markets, like a day or so before. So I still kind of pay attention to Bitcoin as kind of the one that makes a big move. Now, on Wednesday, whatever news comes out on Wednesday with rates, then Bitcoin's going to react to that. But when you don't have big events, I see Bitcoin a lot of the time making a move before the broad markets.
Yeah. So I think that's it's kind of just, it's tough. You see the correlation, and then people are just asking like which one's leading, which one. I think, like you said, it's like some days it seems like Bitcoin leading, some days it's the opposite.
Yeah, I mean, I think Bitcoin probably leads more than it doesn't. But like you said, over the weekend, I'm generally looking at Bitcoin to get an idea of what's going on. But I mean, Bitcoin kind of trades in its own world a lot of the time. Going into a Saturday night, for example, you could have a huge sell-off, and by the morning on Sunday, it's back to where it was. So Bitcoin is kind of an interesting financial instrument in how it trades. But this is definitely the setup I'm watching. If this breaks down with, I would say, closing below this level is what I'm watching. because you do have some wicks back in June that we did test around 17,500. But if we close below this area, we haven't closed below this area yet. So if we close below it and really start breaking down below the 17.5 area, I think that's going to be reflected in the markets as well. Because at the end of the day, this is definitely closer to its June lows than SPY is or the Qs are. Maybe not the Qs, but definitely SPY. So I'm definitely watching to see which way price breaks through here, and then we'll kind of go from there.
Yeah. Okay. So outside of crypto, outside of Bitcoin, you mentioned you're kind of just hanging out waiting for Wednesday's announcement. Say, the market does take another leg down, and obviously we'll be, if that happens, we'll be reassessing there. But are there names you like long that you'd consider adding to, or that are on your watch list, wish list if we do get that next leg down?
If we get the next leg down, I don't know if we're going to have a ton of relative strength, but solar names, ENPH, Tesla, I guess you could call Tesla a solar name too, but the stocks that have moving averages that are continuing to be increasing rather than decreasing. ENPH is one that's kind of been stuck now for the last week or so, but ENPH is one. First Solar, this is one that nobody really trades or even looks at, but First Solar has been an absolute monster over the last 3 months or so. So First Solar is really hanging in there. Sunrun, that's another one that's kind of flagging. So if there's going to be anything that shows some relative strength after maybe the market not doing too well, I think it would probably be solar names. Solar names have recently been kind of almost like opposite of the market. If the market's down, solar's up. If the market's up, solar's down. So solar names will definitely be one that I'm watching. TAN is the ETF if you didn't want to look at an individual name, but TAN's not looking great here either when it's kind of breaking down through this shelf area. So the shelf, anytime you're using the volume by price, your volume shelf, or what I like to call the volume shelf, is just an area where you've got a lot of volume aggregating. So, if the market starts to break down, I'd start looking at names that, have gaps below. So this one has a gap below that would fill in the 77.25 to 77.35 area. Amazon's another one that's got just a crazy amount of gaps here. So, a gap is where you just don't have as much volume kind of sticking out here. And this is probably one of the most interesting charts I've ever seen using the volume by price tool on Trendspider, where you've got literally just all these pockets of just not a ton of liquidity. You see some volume starting to aggregate here a little bit, but if we broke down into FOMC news, you don't have a lot of liquidity down here until you get to the 115s for Amazon. But you also don't have a lot of liquidity above until you get to around 127. So this is just an interesting area for Amazon, but this is one that will likely make a pretty big move regardless of what happens on Wednesday. You just have to kind of figure out which way it's going to move. And I would say if you break the previous low from the 16th, which was Friday, you're probably going to continue down through this area. Kind of acts as a vacuum for price. Just like price gaps happen, volume gaps are literally very similar, except there has been price action that has occurred at that level, just not a lot of volume occurred with that price action. So Apple or Amazon, I would assume, would make a pretty big move regardless. But I think a lot of people have to remember, if you are just trading into FOMC and you're holding options through that, FOMC is no different than an earnings announcement or anything like that as far as options go. Options prices and premiums are going to have a higher premium because you've got people anticipating a big move from that news. So that's another thing to remember. If you are trading options or swinging options into a big event like that, you're going to have a really big move or sometimes your premium may not move at all just because that implied volatility gets crushed. So something to consider as well.
Yeah, and I think right now, and I like you mentioned, the solar names that have been showing a lot of strength. I like looking at some of these stocks that, even though with the market being down so much, some of these stocks are hanging out or at all-time highs, like First Solar or Enphase. Sunrun is still a little is well off its highs, but still looking nice on the chart. The way I see it right now, Jake, is I feel like there are a lot of stocks out there that people, like you mentioned, Amazon. If it gets down to 115, or we were talking about Apple earlier, like a lot of these stocks, I think people see they're down 20% and maybe they want, but they're not like screaming deals yet. They're not like super cheap yet. So if we do remain in a not great macro environment, a lot of these names could continue to move lower versus, like if you go back a couple months ago when Netflix was trading at 180 and it was down like 80% from its highs. At that point, Netflix was like a scream. Like there was like value investors coming in and buying it at like a 15 PE and all this. And I think I'm curious, if we continue to move lower, do we need to see some of those names down there, like more at those Netflix valuations before we get these buyers coming in?
Hard to say, because Netflix, has I think a lot more competition than like your Apples or your Amazons. But it's hard to say. Yeah, a lot of these stocks are still in long-term uptrends. They always pull back, but they always continue to hit higher highs over time. So Apple's definitely one that's looking a little sketchy, though. I don't personally really care about like the iPhone. I just necessarily am focused on the price action. So I always try to look at both sides, right? Like what are people looking at who are bullish? What are people looking at that are bearish? In this case, if you were a bull, the first thing that I'd kind of look at is this inverse head and shoulders that you've got here on the daily chart. Like that's a pretty solid setup here. If we hold where we're at, we're pretty much right where this second shoulder or this first shoulder was, right in the 140. So you can see here the low was actually around 150. We hit 148, give or take a few cents last week. Decent day today. So we'll see. So here's your bull thesis. Bear thesis is just this massive engulfing candle here on the weekly chart last week. You not only had a bearish engulfing candle, the entire body of last week engulfed the range of the previous week, but the range of last week engulfed the previous 2 weeks. So that took out a lot of price action. So we'll see what happens, but generally you will have like an inside bar or something like that after such a big candle like this. But that would be my bear thesis, that, hey, we've broken down through this VWAP from the June lows. So we're pretty much just retesting that area now. So if we went to the daily chart and just looked at kind of where we're at, not really shocking that you'd see price kind of retesting or trying to retest this previous area. So kind of my go-to indicators are volume by price, VWAP. Sometimes I'll use oscillators every now and then, but for the most part, I'm using these areas just to gauge supply and demand. The volume weighted average price, essentially the dollar cost average of all shares bought and sold since this June low, is up here around 153. So the average participant is essentially down right now on their position. So the average cost per share traded or bought and sold is around 153.70. We're trading at 152. So this is naturally going to act as a resistance zone on top of all of this volume here. So, you've got a lot of resistance above. That's definitely something to consider on the bear side of things. So I really don't like to predict, where things are going, but, Apple has held up pretty well as of now. I'm not exactly sure what their dividend yield is, but you are starting to get close to, a time where some of these fixed rates, the 10-year, some of these other rates are higher than the dividend yields you're going to get on some of these big names like Apple and other names. So, you know, that's a big reason why a lot of these names went up so much when yields were pretty much at zero, because, you know, one, the dividend yield of Apple is higher than that. And two, people just are, when yields are that low, people are just chasing essentially, you know, return on their investments as well, not just the yield. So now that the yields are getting to the point where it would make more sense to go into something like bonds and get a higher return as a percentage versus a dividend, that definitely makes money flow out of the market as well. So I think it really just depends on how much longer rates are gonna keep going up. You know, there's a lot of talk last night about what Joe Biden said about inflation. You know, inflation is still up year over year a ton, but you know, inflation really isn't up that much over the last couple months, right? Like, I'm finally going to restaurants and not seeing prices like increase every time I go to the restaurant. You know, there was a time where I was literally, you know, I've gone to a few restaurants where they didn't even worry about, you know, changing the menu and getting a whole new menu. They just put little pieces of paper over the previous price and just added a new price. So, you know, I think we're getting to the point where, at least where I live in Denver, you know, you're not going to a restaurant every couple of weeks and they're increasing the price, you know, every time you're there. So that's good. You know, gas prices are definitely not great, but they're definitely not what they were a couple months ago. So I can definitely see the argument that Biden said last night is saying, you know, over the last couple months, inflation seems flat. But then you go look at like Uber, right? Like, I mean, Uber is insane. Uber, Lyft, what, you know, any ride sharing right now is insane. I think that's gone up, which is very interesting because, you know, oil prices have gone down, but who knows? You could have a supply issue and just riders or drivers in general, which would, you know, affect a lot of people. You know, if I'm going to meet with friends 30 minutes away and I'm planning on, you know, having some drinks, I'm getting an Uber, but I'm definitely not going if the Uber's $90 for a 20-mile drive.
I actually, and this is just specific to Uber. I think there are a couple other, Spotify too. But I didn't really know this about Uber, but I was reading about it. Uber, a lot of the VC funding that Uber had, a lot of that funding went towards subsidizing rides as Uber grew. So in places like San Francisco, New York, people would get like $8 rides. Mm-hmm. And it wasn't economical, but they were using the funds to do this to get the growth. And now that Uber's big, now those rides aren't being subsidized anymore by investor funding, and so they're a little bit more expensive. So it's like paradoxical, because people liked Uber because it was cheaper than taxis and easier, and then now when they remove the subsidy, it ends up being either the same price or even more expensive. I was just at an airport, and the Uber was more expensive than just getting a taxi from the airport, and it was at the and at the airport, it's one of those things where if you get an Uber, there's like a million people waiting for the Uber. You got to try to find the right one. It's like a pain. And the taxi stand just has like 10 cabs ready to go. You just hop in one and go. You don't have to wait at all. And it was cheaper. So it's like, I kind of getting this flip now where shit, maybe taxis are now the move until at least Uber figures it out and gets cheaper again.
I had the same experience. I was, what was that, like about a week ago? Denver airport. My wife had gotten back home a couple days early, so she took the car, you know, because we initially parked there, and it was a Sunday night, and I just had this weird feeling just the whole time. I was like, I really hope Uber's not expensive, thinking, you know, like, oh, I hope it's not $20 more expensive than it usually is. So usually it's $70 to get home. I was like, hopefully it's not like 90 to 100. Pull up the app, it's $175 to get home. And I'm like, what there must be like a glitch. Go on Uber, it's $150. So yeah, I did the same thing. I went to a taxi, didn't get much better. I think it was like $131, but still, I was like, what the?
Yeah,
like, this is definitely not happening again. But yeah, you know, it's one of those things. You're at an airport. I guess I could have taken the train down to downtown Denver, then taken the train down south, but then I would have still had to get an Uber, and who knows, at that point the Uber could have still been $40, and then I just spent 2 hours trying to save, 100 or something. So, and that would have been at 10:30 at night. So yeah, we're definitely getting into this weird realm of kind of almost full circle going back to the taxi after over the last 10 years, people were more geared towards Uber, Lyft. I mean, try to get an Uber and a Lyft on a Sunday in Denver when there's a home game. I mean, you're probably going to pay over $100, and two, you're probably going to end up waiting for 30 minutes unless, you're right in the middle of downtown. But yeah, it's crazy. So I know we kind of went off on a tangent on that.
No, yeah.
That was kind of my point is like Uber and Lyft have become a big part of some people's budgets. And so, what seems like prices may be like stabilizing for other people, if you use Uber and Lyft, it's probably more expensive now than it was a couple months ago. And I think it's just because a lot of people don't want to drive Lyft and Uber anymore. I just don't think a lot of people have had great experiences with those companies as drivers, and you're seeing people quit and doing something else.
100%. I agree. I think Jim Chanos is a big short guy out there. He's been, I think, shorting Uber for a while, and he talks a lot about the different gig economy companies and how they're kind of in nature a lot of times predatory to the worker. And, like I'll see screenshots all the time of someone a driver will do like an $100 ride, and then they end up getting like $8 from it. And it's like, if that were me, that'd be my last time I ever drove after one ride. Last thought on the tangent. I will say, just because you mentioned this, I've taken I think it might be newer. I don't know. You know more than I, but that train that goes straight from the Denver airport to, I think, Union Station downtown. Mm-hmm. It's like $5. Great. Because the Denver airport is like so in the middle of nowhere, out of the way of everything. So like Jake said, even if you got an Uber, but you're Ubering somewhere downtown, you can save a lot of money just getting on that train to Union Station. I had a buddy who I was like, yeah, I'm flying in, and he lives in Denver, and he said, yeah, I can pick you up. But then he was like, yeah, I'll pick you up from Union Station, not the airport. I'm not going to drive 30 minutes out there, but I'll pick you up here. I was like, all right, man. All right.
Nice. Yeah. It's definitely not close to anything. It's in its own little quadrant of Denver, but it's nuts. I look at prices all the time, so I wasn't really anticipating being like that shocked with price, but that was the most price shock I've ever seen, like I've ever experienced. When I saw that, I was like, there has to be like a glitch or something in the system. Nope. Pulled it up, just kept going up. I think it, like at one point it was 180. So, and that's for like a 35, 40 mile drive on interstates the whole time. So, $180 for a 40-minute drive. I mean, that is nuts.
Yeah.
So yeah, going back to inflation, if you do have parts of the economy that a lot of people use, and most people don't say they're going to go get a taxi anymore. They say Uber or Lyft. So, if those prices don't stabilize, then these inflation numbers may not really be the true gauge of where inflation is. So, but other than Lyft and Uber, I have seen prices kind of stabilizing.
Yeah, I think one of the big ones in last month's CPI was rent, which isn't great to see because I think that's a little bit more sticky. Yeah. And a lot of people are thinking right now with mortgage rates rising so much, maybe that's going to put people that were on the fence of buying a new house. They're going to put that off longer, which means they're going to rent longer, which is increasing the demand for rent. So certainly the housing situation. But to me, it's just so silly. And I know you got to run, Jake, so I'll let you go in 2 minutes. And if we've got any charts from the chat, we want to check out in the last 2 minutes. But my thing with that is it's just silly because it's like with how much rates are rising and with the mortgage rates rising, we're essentially like disincentivizing new building while we still have a housing shortage, right? There's still like not enough housing out there for people that want it in America or need it.
Yeah.
Yet we're going to make it harder and like more expensive to build more. It just is like, I understand why it's happening and why we need to limit inflation, but that's one of those kind of, I feel like reverse effects where it's like, okay, if we were building more, then had more house, the supply was higher, price would go down. That might be better for more people than than pricing more people out of being able to buy homes.
Yeah, I mean, you just went from one extreme to the other. Initially the extreme, post-COVID was lumber prices. Like supplies were so expensive, it didn't make sense to build new houses. Now it's the opposite, where those prices have come down from the highs that they were at. But now, a mortgage, if you want to buy a house, I think I saw something the other day where if you wanted to buy like a $500,000 house when you had like a 2.8%, 3% mortgage, or sorry, interest rate on your mortgage, you were paying like $1,300 or something. Now you're, for that same house at a 6% rate, you're paying like $2,600. So, now all of a sudden the cost to have a house is what's gone up, which limits demand, instead of, the other side of that, which was building new houses cost too much to build, which created a shortage of houses. So it's just the pendulum swinging from one extreme to the other. It's just, it's the same thing. It's just a different force that's causing demand to slow. So, or at least this is a demand side issue before it was a supply side issue. So it's just swinging from, one extreme to the other as far as supply and demand goes. But yeah, it's kind of crazy.
Yeah. I completely agree with you, Jake. Well, I don't have anything else for you. I know you got a call, so I'll let you hop a little early today. Always a pleasure having you on, man. Folks, if you want more from Jake, you want some more of these cool charts, check out trendspider.com. I believe we got the code BZ25 for 25% off. If you want to check it out, I'll drop that link in the chat. And as always, I'll drop Jake's Twitter in the chat as well to give him a follow there.
Thank you so much, man. We'll see you next week.
Will do. All right, Jake, have a great rest of your week.
You too.
All right, y'all. Jake Wujasik from Trendspider. Go ahead and check that out in the chat. Like I said, code 20 or BZ25 for 25% off. Let's get my Benzinga Pro pulled back up. So while we were talking about inflation, I was doing some checking. This is not really concerning because, obviously this was always going to happen, right? Gas wasn't going to fall down every single day. Look, yesterday's average 367.8. Current average 367.7. So we did fall from yesterday's, Sunday's to Monday's national average gas price, but by just 1/1,000th of a cent. So, if you can see, the week over week drop is significant, right? Almost 4 cents, but you multiply that by how many gallons are bought a day by Americans, it ends up being a lot of money. 1/1,000th of a cent, that's showing me, okay, maybe this drop, maybe it's starting to find its equilibrium point. Maybe we'll see gas kind of stabilize out or even come up a little bit from down here at 360. But if that happens, I wouldn't even see that as a huge bearish sign, right? If we see oil prices or gas start to come back up, that might mean that, okay, demand is okay. So we shall see. We shall see when it comes to gas prices. Let me know in the chat what you guys are. I think certainly that helps. And you see a lot, I think, especially in California right now. There's a lot of drivers driving Teslas and whatnot. And it does help, but it's more about, I think, just the overall. I mean, think about it. Uber's value, it's got its app, it's got its technology, sure, but its real value is in its workers willing to drive you, 15 minutes down the road for, and you're only willing to pay, say, $15 for that ride. Uber is going to take their cut. Your driver's going to end up getting $6-7. So, we'll see. I think a lot of people have looked at it long term and said, I think a lot of people have looked at Uber and said this is not sustainable long term. LVLU making a low, located here in Chico, California. No sign of slowing down in fashion e-commerce. Let's take a look. This isn't one I'm familiar with. I have been looking more into the fashion and beauty space when it comes to investments. And if you're thinking, that's weird, Aaron, because I can tell you're not into fashion and beauty, well, you'd be right. But I am into making money. And there are a lot of names out there. What is this? LVLU, Lulu's Fashion Lounge. Lulu's Fashion Lounge Holdings is a fashion brand serving millennial and Gen Z women. Its products include fall dresses, winter dresses, sweater dresses. So, all right, I don't love the fact that it's supposedly my age demographic, and I've never heard of it. I'll visit the website real quick. Lulu's Lounge. It's not related to Lululemon at all, correct? I don't think so. I'll have to do some polling among my friends that would be in this demographic, target demographic, and see if they like this, have heard of it. Lulu's Lounge Holdings. Let me see some market cap 200 million. Yeah, so it's a smaller company. I don't know, but maybe this could be, Josh, like I said, I'm trying to get more into the beauty and fashion space as an investor. Maybe this will be my one that I can look at, do some equity research on, and see how I like it. Because what I was going to say is there are a lot of names out there, mostly in the cosmetic space, I would say right now, like Ulta Beauty, I've talked about a few times on the show. I mean, and just look at this chart going out. We're on a daily chart here, right? You got your hit from COVID, but since then, it's just been on a slow grind march upward. You can't find a lot of charts that look like this. I mean, look at the return compared to the Qs in this time frame, going back to February of 2021. So at this point, a year and a half, Ulta's up 46%. Qs are down 12%. It's not, trust me. I mean, with the way this market has been, I'm sure it feels like, oh, no matter what you've been invested in, no matter what crypto or what ETF you've been invested in, you've lost money. There are little like hidden corners that have been performing well, and cosmetics, beauty has been one of those. Same story with e.l.f. Look at this one. Same time frame. We're looking at the Qs and e.l.f. 25 down 25% on the Qs, up 30% on e.l.f. Heading over into the more, fashion space, right? Lululemon certainly has had some rough, like here, Lululemon might have been, performing worse in the overall market, but still going back in that same time frame, Lululemon up 8.5%, Nasdaq down 15%. Called the lipstick index. I like that, MS. I don't know who you are, MS, but I like that. Well, because I don't I host a show with you guys, not with you guys, but like with you guys every day. I've got the audience, and the show is a pretty generalized, right? We'll cover anything in the stock market, cryptos, whatever. But outside of the show, when I'm like writing articles and whatnot here at Benzinga, sometimes I think it would be nice to have a kind of a beat, like a niche. Like I know I'm covering this market, whatever. And I was like, what if I made my beat the fashion and beauty, right? Because I think it's overlooked a lot of the time, right? People all want to find the next big tech stock or the next big, good energy, clean energy stock or something like that, like the sexiest thing. But it's like, what if I was just a value, minded investor that looked at a lot of these so-called lipstick plays? And I think historically cosmetics have actually held up in times of recessions. Let's go to Sally Beauty Holdings C, because I know this one's been around for a while. I'm not saying it didn't go down in 07, 08 when everything else did, because I'm sure it did, but oh yeah, it looks like it was only public for a little bit before then, but you got your dip here. Then, I mean, man, this thing was a monster from, I think Sally's been kind of a dog compared to the other names in the space, though. This isn't one that's as exciting to me. But yeah, I mean, there are a lot of names out there, right? If you would have found Lulu back in, that's what I'm saying, is if I start covering these stocks and it's like something like Lulu, you find out down here, it's like, oh my God, people are loving this. One that I hear a lot of women talking about right now is Aritzia. it's just hard for me because I don't know, like, is Aritzia going to be one of these like kind of fad things store that was like really hot for a couple years, or is it here to stay? I'm not quite sure. On is another one that I've been looking at. This is a shoe company. Vale cooking today. Let's check out our good friends Vale. A little energy play here. Let's see if we got any news. Nope. Oh, MS, are you saying the lipstick index in terms of like inflation, like recession? I thought you were saying just yeah, it is. Yeah, what is? Oh, you're saying Val's cooking today? Yeah, it is. I was seeing if there's any news on there. Let's go over to Netflix. Was watching this one earlier. Still down today, I believe. Q's. And then also, I did want to talk more about. I would say it's an argument about, and Jake and I think Jake Wojasik, who was just on RGS, not performing along with the beauty trades. I see. I don't even know what is Regis. What is Regis? Yeah, I mean, if this stock is down 28% and you look at this chart compared to Ulta's, I think you can just see who's eating who's lunch there, who came in and started taking market share, right? And in any sector, right, even if the sector is performing well, you're going to have winners and losers. You're going to have companies that are shitty companies going out of business. I appreciate it, Jesse. I will maybe I'll hang out with Ryan and Zunaid while Mitch is out. So I was going to say, I think, Jake and I may have disagreed on this earlier where he was saying, he thinks that Bitcoin leads most of the time. The reason that I think, and we'll be able to get more data and numbers about this as it develops. But the reason I think it's really NASDAQ and the futures, determining, and then Bitcoin following it, is I don't know if you guys, there have been times essentially where like Bitcoin will be trading down overnight all night, and then the market will open at 9:30 and like spike up, and then Bitcoin spikes up, and it'll be, and you look at a chart and see it like exactly like right at 9:30, and it's like, okay, it's making this move obviously based on the stock market opening. But furthermore, if we are truly, if we're at a point where NASDAQ is just like straight up correlated with Bitcoin, we could be in for some trouble, because if Bitcoin goes from 19,000 to 10, which is where a lot of technical and crypto traders are calling for Bitcoin to bottom out whenever this crypto winter does start to, we start thawing out of this crypto winter. Does that mean the Qs are going to go down another, 50% from where we are right now too? Because if so, we could be in a lot of trouble. I'm going to go to a 5-minute chart here on Bitcoin and see if we can see some of these movements that I was talking about on. And then my good buddy, I say my good buddy, he doesn't know it. Well, maybe he might know I exist. He follows me on Twitter. But Joe Wiesenthal put out in his newsletter this morning the correlation between Bitcoin and. So yeah, I mean, look right here. So is this just a coincidence? Look at all. Okay, so these are 5-minute candles. These are 5-minute candles. Bitcoin's moving. I'm not saying it's not moving. It's got a mind of, it's got autonomy. It's going to do its own thing. But then right here at 9:30, you start getting these big moves. You look how much bigger these candles are right here than all these little ones. You think that's a coincidence that right when the stock market opens, then Bitcoin, traders have something to go off of? And we can go back to, you just like right here. I think a lot of times these big moves end up coinciding with the market or with different markets around the world. It's hard. It would be hard for me to believe that we're really in a spot where, Bitcoin's going to determine where Nasdaq and SPY is going to go. It is a very good measure of just strictly risk on, risk off. If anyone's got any stocks, any hot trades to make, let me know, because I'm down to make some moves here. I don't want to just wait. Yeah, and I think that's the best way to use Bitcoin, right? If Bitcoin's going up a lot, you can say, okay, people are willing to take a little bit more risk right now. I just wouldn't be, Bitcoin was down all weekend. That means the Qs are going to open down today. We basically saw exactly that happen today, right? That Bitcoin was down all weekend, down overnight, right? Let's look into, let's go to 10-minute charts here, or 10-minute candles here. Oh man, hold on. And so I think a lot of people would have looked at Bitcoin, looked at crypto and what was going on there and said, okay, we're going to have a really tough day in the markets today. And then what do you know? The Qs open and then are green within a few minutes. All right. I'll check out, we'll check Vale back out. Is this, is Vale being picked up right now in a bunch of, are people talking about it on social media, on Discords? What's going on? What's the catalyst here? Because I didn't see a news catalyst. I know the company. Vale is the world's largest iron ore miner and one of the largest diversified miners, along with BHP and Rio Tinto. Earnings are dominated by the bulk. So you can see Vale's stock over the past 6 months has gotten kind of beaten up as different commodities have gotten crushed. Right, we hit. Damn, wow, Vale got up to. It's incredible. Let's take this off so we can see the actual price. Yeah, I mean, look, you guys can see right here. There's a lot of consolidation here. There's a lot of buyers at this level. You can see on a volume, we got a nice volume spike last week. Today looks like we're trending a little bit lower on volume, but I like this move. And you've got a clear target to the upside here at the $18 mark. That if you do get this breakout, a lot of people are going to see you might have some resistance here at 15 and then some more at 15.5. But you do have that nice breakout potential. I don't mind Vale. Yeah, and maybe that's it, Brian. Maybe it's like during market hours, Bitcoin is following the market, but then as soon as the market closes, it's like, hey, our turn now. You guys had your fun from 9:30 a.m. to 4 p.m. Eastern. Now it is our turn to be the biggest show in town because people can just watch us. What was the high volume? Veru. I haven't traded this one in a while. I forgot what this company does, to be quite honest with you. But all right, guys, I do want to share this post from Mr. Wiesenthal over at Bloomberg. I'm going to just do it from his Twitter because I think the newsletter is locked. FNGU, we'll check that out in a sec. So after all this effort, the coins are still just tech stocks. From the markets newsletter, I wrote about how with the merge, inflation and everything, the coins should be differentiating. Instead, they just track the Nasdaq 100 sub here. So we'll just break this down real quick. We'll go through Joe's main points. Just over a year ago in this newsletter, I wrote, and here I'll go full screen on here to make it a little bit easier in case some people are some visual learners as well. Give me 1 second. You want to check out NVIDIA? We'll do that. We'll get to NVIDIA after this real quick. All right, so just over a year ago in this newsletter, I wrote that we were seeing what should be the last ever crypto bull market. My argument was basically that there was enough maturity and differentiation among coins and projects such that they shouldn't all trade in unison. And that's been a big, critique of mine of crypto, I think, is because, you'll have people shilling different coins or different projects, maybe more so a year and a half ago than today. But, you'd hear it a lot like, oh, this coin is the future of finance, where it's revolutionizing payments in XYZ way and smart chain technology and this and that and all the different buzzwords you want. But at the end of the day, that coin that they'd be touting would be up when Bitcoin was up and down when Bitcoin wasn't. And I know there are exceptions. There were days where, Avalanche was up and Bitcoin was down. But for the most part, if Bitcoin was up 2-3%, all the other coins were up and vice versa. If they were down, Ethereum, would sometimes outperform Bitcoin, sometimes lag Bitcoin. You can see here on this chart that Ethereum, Bitcoin, and Nasdaq all pretty much have traded in tandem. And I can see that you can see that break here in the last few months where when we got this rally in Nasdaq, Bitcoin and Ethereum did participate in the sense that, like Ethereum went from 1,000 to 1,800, almost doubled in that time frame. Or I think did essentially. I think Ethereum basically doubled in that time frame. Bitcoin, had a nice little bounce too, but not as much as Nasdaq. So there's a lot that's happened since. For one thing, the bull market has turned into a bear market. Meanwhile, we're experiencing the worst inflation in over 4 decades now. And yet Bitcoin, which has often been touted as an inflation hedge, has done terribly. And Ethereum just experienced its long-awaited shift to proof of stake, which, if nothing else, cuts its energy use massively while demonstrating that a loosely decentralized network can undergo major upgrades. So all these developments are happening. And yet, basically, they're all still just tech stocks. Not only are the coins trading in line with each other, they're still basically trading in line with the Nasdaq 100. Here's the chart. He goes on. What does this all mean? I think one possibility is that the marginal buyers of cryptocurrencies just doesn't care about any of this stuff. Proof of work, proof of stake, the merge, inflation hedging, the halving, deflationary monetary policy. What's all that stuff? In other words, it's possible that there's a small coterie of people paying attention to any of this. And what's really driving the price is just animal spirits of a much larger group of speculators who are also moving the price of Zoom, Tesla, Meta, or wherever else. So speaking of fundamentals, on the latest Odd Lots podcast, Tracy Alloway and I talked to Christine Kim of Galaxy Digital about Ethereum's shift from proof of work to proof of stake. Christine is phenomenally clear about the merge, its technical details, how it happened, and the potential risks of the new network architecture. On some level, the big story here is that the network has dramatically limited its power consumption, making for a real departure from Bitcoin in one of the most controversial aspects of crypto. But perhaps the bigger story is what it symbolizes, that after years of effort, this sprawling network is capable of undergoing such a dramatic upgrade. In other words, the fact that it can be done at all is perhaps more interesting than what was done. Whether that will ever matter to the price of the network is TBD. So basically, let's break this down. Joe's point here is this: that at the end of the day, all of these things that have supposed to have been, huge bull cases for crypto, I'm sure if you talk to a lot of Bitcoin maximalists in 2018, 2019, and you told them, hey, we're going to see the biggest inflation we've ever seen in 40 years, they would say, okay, this will be great for Bitcoin. Bitcoin will, rip from here. And that hasn't been the case. Why? Because in Joe's point, is he's saying that the primary use case, or at least what's been the primary use case for Bitcoin, for Ethereum over the past 2 years, over the past however long it's been around. I'll rephrase. Going back, at least since COVID, the main use case, the main reason people have been buying Bitcoin and Ethereum have not been as an inflation hedge or a way to send money to someone or, because they're mad at their bank. It was all an investment, a speculation, a way to make money. And to Joe's other point here about the technical implications of Ethereum, is he saying that this is a cool technological advancement of crypto that's showing, hey, this major network, Ethereum, the second biggest coin out there behind Bitcoin, can go through a big technical change, showing that, hey, this is something that crypto can do that maybe the US dollar can't, or you can't do with traditional money. And it's not to say it's not cool. It's not a great, glowing piece of technology that we should all be saying like, yeah, this is really cool and learn more about. He's just saying that's all great and dandy, but the core reason people have been buying ETH and Bitcoin is for speculation to make money, not because of this proof of work or proof of stake thing. Yeah, and I think with that, I think it's interesting with when you have a sell the news event where a lot of people are anticipating it being a sell the news event, because you had that happening a lot, I guess, essentially, that people were expecting this to be a sell the news event. I wonder if the same announcement would have been made during a bull market if the reaction would have been different. But I think it is difficult because I think it's difficult just anytime you have a sell the news event where a bunch of people, I mean, think about the way I see it is Wednesday, right? A lot of people are expecting that to be a sell the news event, and it very well could be the FOMC meeting, or it could be the opposite. Who knows? Time will tell. I think and I'll pull this back up, Joe's point here, the big story here is that the network has dramatically limited its power consumption, but perhaps the bigger story is what it symbolizes, that after years of effort, this sprawling network is capable of undergoing such a dramatic upgrade. I kind of see that similarly to how Tesla, one of the things that I think when I first heard this in like 2016 or 2017, I was like, holy shit, this Tesla thing is like different. Like these guys are legit. Like, when they the first time they did a software update that, or maybe it was just the first time I saw a story about it, but that like people had their Tesla's software update overnight in their garages, and then the next day the car was faster. It's like, okay, that's different than any other car out there, that they can do a software update overnight, and now everyone's car is faster without them ever having to go into a shop or anything like that. Like that in itself, whether or not, that's some huge implication for Tesla's business, or this many more people are going to go out and buy Tesla cars because of that. To me, that was like the bigger story was, okay, this technology is like crazy advanced, powerful, wicked cool. And I think similar to ETH doing that merge here, it might not have huge business implications or implications on the price of Ethereum, but just the fact that they're able to do it is an indication of, I guess how advanced these developers are and what they're doing. So again, bottom line from Joe's point was, say what you want about crypto, whether you're talking Bitcoin, whether you're talking about ETH, these things have essentially tracked Nasdaq over the past, really going back a year. So we'll see. We shall see if we're going to see that break. I hope we see a break if we see crypto continue to move lower, because if it's true, the overall market is now, oh, that's interesting. I haven't heard that. So I guess because of this proof of stake, now people have an opportunity to sell ETH that may have been staked and not available to sell before. So that could be some added selling pressure after this merge. And yeah, I mean, I think, Brian, if you're a believer in ETH long term, now's a buying opportunity, right? I don't say that often, that I haven't started buying any ETH or Bitcoin yet. I think to me, here's what I'm worried about with crypto is, even when the markets turn around and Ethereum and Bitcoin start coming back up, and maybe I would need to see numbers here, but like, think about it this way. During the bull market run, when Bitcoin went to 65,000 and ETH was at 3,000 or whatever, how many people in America, and I'm just generalizing, I'm just going to make up numbers, and hopefully I'll be able to see these numbers laid out for me by someone who actually has the data. But how many people heard about Bitcoin like during that bull run, that either maybe had heard about crypto before and never got into it, or they were hearing about it for the first time through one of the million different, advertisements? We saw the crypto.com and FTX ads during the Super Bowl, all that. Say there's 350 million people in the United States. I would venture to say, you know, a majority, right, heard about or, you know, heard more about crypto during that bull run. Out of that majority, say 200 million, only a certain percentage of them are going to delve in and invest. Out of the people that chose to delve in and invest, a large portion of them lost money. Basically, what I'm getting at is the general public, I feel like now has been through the, you know, kind of, I guess, negative effect of buying at the top, whatever. So on the next bull run, there will be people out there who said, oh yeah, I remember the last time this happened. I bought Bitcoin at 50K and, you know, 2 months later it was at 30 and I lost 40% of my investment. I think it'll be harder now to get not people that are really into crypto, not even necessarily maybe people that are really into investing, because I think people that are into investing into trading stocks will start to see Ethereum and Bitcoin when it turns around as, okay, this is could be a sound investment and know how to manage their position. I think you're going to have trouble getting your, you know, your Aunt Linda's or your Grandpa Tony's who might have been asking you, hey, Brian Blockchain, I keep seeing more and more about this Bitcoin. Can you help me get a wallet set up? You know, we were hearing a lot about that, or hearing a lot of that in November 2021. I don't think this time around we're going to see the average general, you know, U.S. worker get as interested in crypto, just because they might have this bad taste in their mouth that, oh yeah, we've been through this before, or maybe you don't even have to been through it yourself, but even if you're just have read stories about some kid or someone losing a bunch of money on NFTs or crypto, that I think people have this innate understanding that if something sounds too good to be true, it probably is. And when you had people being basically like, oh yeah, buy Dogecoin up here, we're all going to get rich. Or, you know, even it's not specific to crypto. We talk about this with GameStop and AMC. When people were saying, oh yeah, buy GameStop at 350, we're all going to get rich. We're all going to make a lot of money. If something sounds too good to be true, it probably is. So for every single person that's made a buck or two off crypto, there's a handful that were held or that were left holding the bag. So that's just my prediction. I could be wrong. I hope I'm wrong for the sake of the crypto industry, that in the next bull market, maybe more people will be buying Bitcoin than were in 2021. But that's just my prediction, as I think that whenever we do see Bitcoin and ETH start to turn around, there will be maybe a little bit more hesitance just from your average everyday American to buy some of these coins. Let's get over to NVIDIA. I see our good friend, I'm going to mess up the name, Trendspider wants to check out NVIDIA. NVIDIA is one of my names, and I mentioned this earlier with Jake, that as the market moves lower, if the market continues to move lower, I have a short list of companies that I want to go long in a serious way. For me, I mean, I'm talking about, like, I might put a couple $1,000s into NVIDIA, but to me, that's a lot of money. That's like a majority of my savings. So I want to go into some of these names long that I really like. NVIDIA is one of those. I talked about this last week. We'll talk about it again. NVIDIA right now trading at $130. This is obviously split adjusted. You can go back here from September to essentially May here. So you're talking 8 months. This thing was basically trading in a range sideways, right where we're at right now. And so what does that tell me? That tells me that even as this stock wasn't moving up, even as, you know, it was kind of just trotting along here, not doing anything, it always had buyers right here at around like 125, 130. I wouldn't mind starting a long position here. And if you're doing it as more of a swing trade, whatever, you can put a stop loss right below here at like 120, 125 and say, okay, if we break through this level, that is potentially very bearish, that we can continue moving lower from this level. As someone who's long NVIDIA, who wants to add to my position, I would love to see us get some symmetry here. So what I mean by that is just seeing us kind of maybe soak up, trade sideways, consolidate here for a little bit, and then get that next move up. You know, I'm not expecting some V-shaped recovery where we're going to go from 130 to 280 in a few months. No, I wouldn't be surprised to see this just kind of bounce around. But then eventually I do very much like it on the long side. You know, and there's some other names out there too that I'm starting to, you know, potentially take a hit at. Netflix is one that we've talked about a lot today. Already has had a great move from about 170 to 240. So huge move in Netflix over the past. Let's go to monthly candles here, and you can really see that, you know, we hit this low here, kind of had some of that consolidation. But I mean, in July alone, up 28%. Closed down, it looks like, in the month of August, but now trading back up in the month of September. So Netflix is one that I think gets really interesting because you have the rare case where you can make an argument that it is both a growth and value stock at this point. 118. Curtis, is that what you're saying your stop loss is for NVIDIA, or the level you'd be looking at? Conference will be sell the news. Gaming has been hit this year. Yeah, and that is tough. I mean, I've been seeing a lot of posts of people who were like scalping NVIDIA graphics cards who they get left with, you know, they'll have like 100 in stock and they're just trying to get rid of them and dump them. Like it seems like the secondary market for chips cards has absolutely collapsed, especially you take into account gaming. And addition to that, the drawdown in the crypto market, it's not great for NVIDIA in the short term. Even in the medium term, I think NVIDIA has made some strides to try to distance itself from crypto, to basically be able to say, hey, even if crypto completely collapses, like our business is going to be fine. Gaming is still its core customer. But outside of that, NVIDIA's technology, why I like it for the long term, isn't even about its gaming either. It's just like, I think from an overall tech standpoint, you know, it's NVIDIA is in a position to where its technology is set to be used in all these different industries, whether you're talking about robotics, self-driving, you name it. NVIDIA should have its hands in it when it comes to, you know, different growth industries. Yeah, Curtis, I'd be willing to buy some down there too. I mean, but that's the thing, is like, I'm talking about long term. If I buy a couple $1,000 worth of shares at 130 and I'm holding it for 5-10 years, I won't really care, I guess, if it dips down to 118. But I would say if you're out there trying to swing this in the short term or medium term, hey, it hasn't been a great time. CRM, you want to check out Salesforce? You can do that. Salesforce. I mean, this thing is a monster. This is monthly charts too. This thing's crazy. Gone from 315 down here. As far as different SaaS companies go, the stock actually isn't even that beaten down. I'm looking at this chart and it looks so bad, but it only went from 315 to 150. That's only a 50% drawdown. Netflix drew down like 80%. So it's like, so this thing's holding up pretty well. No, I don't know. I mean, you know, I think a lot of these, basically all your, you know, SaaS work from home companies, your Salesforces, your Zooms, your Monday.coms, your Asanas, all these things have gotten hit so hard because they were all just a lot of this growth pulled forward, right? A lot of these companies existed, and like Salesforce, like Asana, well before COVID. Businesses had a need for their services, and then just had that need completely exacerbated by COVID. So if, you know, Zoom was set to sell 1,000 subscriptions to different companies in 2020, then COVID hit, and now they sell 10,000. Well, yeah, the stock's going to go up a lot. And what's going to happen if the stock goes up a lot because of that, then that catalyst starts to shift, you're going to have them come down a lot. So I don't know. I think if you are interested in some of these, you know, SaaS companies, your B2B SaaS companies, your CRMs, your Salesforce, I would just do a lot of DD and see which ones do you think. I would try to take COVID out of it and see, like, okay, growth wise, what was Salesforce doing before COVID, right? Obviously the company's doing well, the stock's doing well. It went from $68 to 160 in just a few years. And we're now trading below the pre-COVID levels, which is interesting. Multiples should be lower. Yeah, and that's why I think you know, we'll see. Do you think NVIDIA will hit 135 again today? Okay, so I don't really day trade as much. I can take a look at the chart and tell you what I think. You know, if you're holding calls or something and you're in the green, I would say maybe trim some. All right. Here's what I'll say about NVIDIA. Again, this is not investment advice, nor am I a professional day trader or anything, so I don't know what the hell I'm talking about. I want a 5-minute chart here. So over the past hour, this thing's been kind of in an uptrend. I would play that strength. And then right here, you have a clear resistance level, 134.63. If we clear that, if we keep moving higher and clear that, I would see that as bullish and a potential, breakout. But yeah, I mean, I don't see anything. I mean, we're kind of running into some resistance here, so it wouldn't surprise me to get a little pullback here. So yeah, looking at the chart, if I had to play this, I would play it on the bullish, on the long side, maybe up to here, maybe a little bit higher. And then if you break out, no, okay, we've got some room to run. And if you reject off there, okay, great. Yeah, I know. And I think I've been seeing more and more of this take. I think that, before we bottom out and hit true capitulation, you need something to break. I think a lot of people are looking at, micro strategy, looking at Tesla, saying, okay, how, tight of an environment can we really be in if Tesla is still trading at a 15 in price to sales and a 51 forward PE? So I don't know. I really don't have a good answer to that. If the Fed, if we are waiting for something to break, or if maybe we can somehow get out of this without something breaking, I have no clue. All right. Looks like we've only got a few minutes left. Let me know in the chat if you guys have anything else we want to check out before the end of the day. And yeah, I think so. All the drawdown that we've seen across the board for the most part has been multiple driven, right? We've seen Netflix's multiples get absolutely crushed. We've seen Shopify's, right? All these things get down to more realistic valuations. I think the next step in it is seeing the earnings coming in, because we got through that first earnings cycle during this recession a few weeks ago, and most companies beat in part because I think some expectations were lower. But across the board, I think people were expecting really, really poor earnings, and that wasn't the case. Next time, that could be different, right? I think I was talking to Options Mike about it on Friday. About a month from now, we're going to start to see earnings come in again. And if you start seeing that the earnings are lower, any of the multiples getting crushed, the S&P certainly could make a next leg lower. Yeah, the 20-year dollar high is hurting, I think, companies across, a lot of companies that do a lot of international business and whatnot. So, oops, let me make sure my redirect is set to the next show, because Money Mitch will be starting soon, and you do not want to miss Mr. Mitch today. Mitch is fiery today. I think he's maybe his football team won this weekend. The Dolphins. Either way, Mitch will be bringing that energy today, 1 p.m. here, coming up in 2 minutes. He'll be talking to, let's see. He will be talking to Giles Coughlin. Giles Coughlin, the analyst at HYCM. Should be a very good interview there. Again, this stream will redirect you there automatically. No need to go anywhere. So without further ado, smash the like, subscribe to the channel. Peace and love, you guys. We'll be back tomorrow. FNGU. Caleb, I didn't get to check this one out. Let's do it real quick. FANG indexed 3 times levered ETF due. All right, I don't know what any of this means. That's kind of scary. That's a long due date away. Cool. All right, guys. Caleb, we can look more at this ETF tomorrow. Just remind me in the chat. Great day to be a dolphin. Boop. Like I said, love you guys. We'll be back tomorrow. Peace.
This is Benzinga.